Another prediction is around data science. And post-COVID, in a virtual world, has become just one of the key buzzwords, where data science and using data and AI and algorithms and machine learning to help portfolio companies becoming very, very prevalent. And so I think at some point over the next 5 years, you will begin to see the data used absolutely instead of humans. And so we'll see whether that plays out. Very interesting for all of us in the asset management industry.
And what's happened in the last 10 to 11 months is many other industries have proven that they can do it too in a way that's different to the tradition of the 9 to 5 office hours. So that obligation of being present physically is now an obligation of delivering outcomes. And that is a very meaningful shift in how we think the workplace composition and culture. My advice so in this sort of job, you have to come to potential employers with specificity that helps them understand why they should hire you. Generalities don't work.
The move to the cloud, a massive trend, and everything is going into the cloud. Data infrastructure we see as the next gold rush. Data has become the most valuable currency in the world. AI is growing very fast. 3 years ago, it was still something of a new concept. It's now fundamental, and you're seeing machine learning being adopted across the board in applications. The volume of deals getting done in the UK and the amount of capital available to invest is very encouraging post-Brexit. I think the most important thing, though, is that the UK has now created critical mass in a fast-growing technology sector. And that just wasn't true when we started 20 years ago. The market is transformed.
Beneficiaries of companies in terms of the sectors during COVID and remain so today. Wellness, particularly if you're doing stuff like online yoga, Peloton, consumer staples, sustainable and ESG investments very much in vogue. Cloud and digital infrastructure, we've seen the rise of Zoom, e-commerce, let's look at the rise of Amazon. And then you kind of have the watch list where you've got things like repair and maintenance, telecoms, logistics, facility-based healthcare, manufacturing, which can't work from home, decimation in oil and gas, leisure, travel and entertainment, brick and mortar retailers, high streets have closed, the portfolio companies we invest in along various ESG. It's very much evolution rather than revolution. But I would say that if you're not focused on ESG and if you're not building the impact of ESG over time into your investment decisions today, it will hurt you in the next 2, 3, 4 years, not just from a social, PR, moral stance, but also from a commercial stance. I think if you ignore sustainability risk in your investments, you're not doing your job as a fiduciary investor.
In the future, we'll see more priorities on efficient robotic processes and longer term DLT, so distributed ledger technology and blockchain. Expect public policy to drive investment in the transition to a low carbon future and to a more digitalized economy. Remember that the financing of all of this cannot come from governments alone. Investments from the private sector are key. So as the sector grows, you'll see the same needs coming through on the private capital markets. Incorporation of ESG and better access to digital technology, including data and analytics. And all of this requires a huge access to talent and also, by the way, a driver for diversity and inclusion. So that's your opportunity, that's the challenge, because one of the things the EU is concerned about is the concentration of financial expertise in London, which is not the case for other cities in the EU. So I think London will still have a very important role to play. And by the way, it's much more important to be integrated and doing things together than working on silos. So the fact that London remains as a bit of competition in a near European time zone, I think is a good thing for everybody. It'll make things in the EU probably happen faster.
Now, what's likely to happen in the budget? The question is, are there going to be any tax increases? The problem the government has is that despite a manifesto promise to freeze income tax, national insurance and VAT, the special circumstances we're in might make it too tempting to resist. I could see another 2% on stamp duty land tax. And very, very likely, the currently low capital gains tax rates will be aligned with the higher income tax rates. But there must be a balance between supporting business and repaying government debt. So in summary, With the pandemic still upon us, we are yet to come out of lockdown. Don't expect to see many changes. The big questions are, will support continue and will some tax rates go up, or will this all be left till next year? But there's no doubt that circumstances have already hastened some changes, and the move to digital tax has received new impetus. Time will tell.
Is that some of these technologies that are taking place now, or the advancement that is taking place in climate and sustainability and agriculture could be massive. And indeed, there's already signs that it's massive. So therefore, as an investor, time to be thinking about this space. Europe, 7 trillion euros of spending required to reach net zero emissions by 2050. Utilities could have an earnings per share compound annual growth rate of 7%. You know, these are incredibly attractive returns in an environment where, you know, returns are quite tough to come by, particularly as some of the stimulus starts to come away from monetary and fiscal. Post-COVID is going to be very linked to energy transition. But energy transition is just one component of that sustainable space. You know, if you think about those 17 Sustainable Development Goals, you know, the amount of electricity generated is just massive. The infrastructure associated with that is just massive. The amount of battery technology or batteries that have to be produced on an industrial scale is massive. The true cost of carbon is to our planet. And if that gets more realistically priced, then again, those companies that are giant emitters will find their cost of those emissions will become extremely prohibitive, to the point they'll either have to go out of business or they'll have to invest in technologies or new processes that mean their emissions will be reduced. And again, for investors, that will create very attractive opportunities.